Ever wondered who's really calling the shots behind Patriot Bank Growth Insurance Services? It's a name you might have encountered if you're looking into financial planning, insurance, or even just banking with Patriot Bank. But the ownership structure of these kinds of entities can sometimes be a bit of a maze. So, let's unravel that mystery together. Before we dive into the specifics of Patriot Bank Growth Insurance Services, it's helpful to understand the typical relationship between banks and insurance services. Often, banks don't directly underwrite insurance policies. Instead, they frequently partner with established insurance companies to offer these products to their customers. This allows the bank to provide a wider range of financial solutions without needing to become licensed and regulated as an insurance provider themselves. It's a strategic alliance, leveraging the bank's customer base and the insurer's expertise in risk management. Think of it like a supermarket having a pharmacy inside. The supermarket focuses on groceries, but they understand their customers might also need health and wellness products. So, they lease space to a pharmacy chain that specializes in that field. The supermarket benefits by offering more convenience, and the pharmacy gains access to a steady stream of potential customers. The financial world operates on similar principles. Now, Patriot Bank is a well-known financial institution. They offer a variety of banking services, from checking and savings accounts to loans and wealth management. It makes perfect sense that they would also want to provide their customers with access to insurance products to cover various life events and financial needs. This is where Patriot Bank Growth Insurance Services comes into the picture. The crucial question is whether Patriot Bank Growth Insurance Services is a direct subsidiary, a division within the bank itself, or a separate entity partnered with Patriot Bank. The naming can sometimes be a little ambiguous. The inclusion of Patriot Bank strongly suggests a close affiliation, but the Growth Insurance Services part hints at a specialized function that might be handled by a distinct arm. To really understand the ownership, we need to consider a few possibilities. Firstly, it could be a wholly owned subsidiary of Patriot Bank. In this scenario, Patriot Bank would have established a separate legal entity specifically focused on insurance services. This subsidiary would operate under the Patriot Bank umbrella, benefiting from the brand recognition and customer trust associated with the bank. However, it would have its own management structure and would likely be subject to insurance industry regulations in addition to banking regulations, albeit indirectly through its parent company. Secondly, Patriot Bank Growth Insurance Services might be a DBA, doing business as, name for a department or division within Patriot Bank itself. In this case, there wouldn't be a separate legal entity. The insurance services would be offered directly by the bank, potentially through licensed agents employed by Patriot Bank. This model is also common, allowing the bank to integrate insurance offerings seamlessly into their existing customer relationships. Thirdly, and perhaps most likely given the structure of the financial industry, Patriot Bank could have partnered with a third-party insurance company. In this scenario, Patriot Bank Growth Insurance Services might be a marketing or branding name for the suite of insurance products offered through this partnership. The actual insurance policies would be underwritten by the partner company, who would bear the risk and handle claims. Patriot Bank would act as an intermediary, connecting their customers with these insurance solutions and potentially earning commissions on sales. So, how do we determine which of these scenarios is the reality for Patriot Bank Growth Insurance Services? The most reliable way is to look at official sources. These could include Patriot Bank's official website. Their About Us or Investor Relations sections might provide information about subsidiaries or partnerships. The section on insurance products should clearly state who the provider is. Regulatory filings. Banks and insurance companies are subject to strict regulatory oversight. Public filings with agencies like the Securities and Exchange Commission, SEC, or state insurance departments might reveal ownership structures and key partnerships. Marketing materials, brochures, policy documents, or even the Patriot Bank Growth Insurance Services website itself should identify the underwriting insurance company. Pay close attention to who is actually issuing the policy. Contacting Patriot Bank directly, reaching out to their customer service or investor relations department is a straightforward way to inquire about the ownership of their insurance services. While I don't have real-time access to browse these specific resources for Patriot Bank Growth Insurance Services right now, we can explore some common patterns and what to look for. Typically, if it's a partnership model, you'll see phrases like insurance products offered through a partnership with insurance company name or policies underwritten by insurance company name. The Patriot Bank logo might be prominently displayed, but the actual insurer will be clearly identified in the fine print. If it's a wholly owned subsidiary, the name might be slightly different, perhaps Patriot Bank Insurance Services Incorporated or something similar that indicates a separate corporate entity. Information about the subsidiary would likely be available in Patriot Bank's annual reports or other investor communications. If it's a division within the bank, the language might be more integrated, referring to Patriot Bank's insurance products without explicitly mentioning a separate entity. However, even in this case, if they are underwriting the insurance themselves, which is less common for banks, they would need to be licensed as an insurance provider, and this information would be publicly available through state insurance departments. Given the name Patriot Bank Growth Insurance Services, the inclusion of growth might suggest a specific focus or a branded offering within a broader insurance strategy. This could lean towards either a specialized subsidiary or a branded partnership. Let's consider the benefits of each model for Patriot Bank. Wholly owned subsidiary offers greater control over the insurance operations and allows for tighter integration with the bank's overall financial strategy. Profits from the insurance business would directly benefit Patriot Bank's shareholders. However, it also entails greater regulatory burden and capital investment. Division within the bank simplifies operations and allows for seamless cross-selling of banking and insurance products. However, it might require the bank to develop in-house insurance expertise and navigate insurance regulations directly. Partnership allows Patriot Bank to offer insurance products without the direct risk and regulatory complexities of underwriting. They can leverage the expertise of established insurers and focus on their core banking business. This model often involves revenue sharing through commissions. Considering these factors, a partnership model is often the most efficient and common approach for banks offering insurance services. With that said, thanks for watching and until next time.